G'day guys, welcome back to Mango Invests. In this video, we're going to do something a little bit different. We're going to do a little bit of deep diving into Alibaba, and then like why I own it. We're going to look into the financials of the company and just see what we're sort of working with here. But I'll just give a quick background into how much sort of money I invest in with Alibaba. So we'll look into the portfolio here. But so currently my equity is $26,000. But I'm currently negative, just over, $10,000, and this is all US currency as well. Back in, when was it, October 2020, that's when the company started to decline rapidly. And then I'm sure you guys are all aware why it declined is, there's a lot of US-China tensions at the moment, and the possibility of the company being delisted off the US stock exchange. So it will still remain on the Hong Kong Stock Exchange, but there's just a lot of all this talk about, is the company safe? Is it secure? Is it going to get delisted? Is it not? And there was also, sightings of, Jack Ma, the CEO of Alibaba. He disappeared, and therefore the company reduced in value even more. So there was all these. All this news surrounding Alibaba, and that's where the company started to drop. So I initially saw that drop, and I bought in at around the $236 mark, and then as it started to continuously drop, I just put more money in as it sort of went down. But here you can see I've got 282 shares within the company at an average price of 131. So the stock price is currently sitting at $93. So therefore I'm down a fair bit, being just over $10,000. So I don't think I'm really going to put any more money into Alibaba. I think I'm very happy with keeping it at an average price of $131, simply because I don't want to overinvest into the portfolio, in case it does get delisted or whatever. I'm not really putting all my eggs in one basket. I'm still diversifying just a little bit. So moving over to track your dividends here. Here's the the pie of all the different companies I hold within the portfolio. So as you can see, the largest one on the right hand side here is Microsoft, being 12.4%, and the next one down is Alibaba, being 9.8% there. So it's a very large holding within the portfolio, and I just don't think adding more would be necessarily very healthy. So yeah, I'll leave it at that. But what I was doing, I just got very interested in Alibaba company just to see if I wanted to add more, if I wanted to hold, if I wanted to sell. And I started to look into the financials of the company. So I first looked at stake.com, because this is the brokerage in which I invest. So if you look into the Alibaba or any company within this within the app, you can, with Stake Black, that's an extra subscription that you can purchase in order to get like a little bit more features on that website. So things like the full financials. So we can click this full financials tab here, and it will come up with the three different statements. So you've got the balance sheet, the income statement, and the statement of cash flows. But it's only on a quarterly basis. So I personally like to see income statements on an annual basis, just so I can see. I feel like that's better to see the progression of the overall company every single year as opposed to every quarter. Because during the quarters, it tends to fluctuate a little bit more, but overall, every single year, I think that's a little bit more appropriate to see what's going on with the company. But what I noticed, I looked on, the Stake website here, and I looked at the income statements and all that sort of stuff. I then went on to Yahoo Finance and MarketWatch and a couple of other websites where they show the financials of the company, and it wasn't accurate. Like when we look at the total amount of cash and cash equivalents, here it says 28 billion, and it was different to Yahoo Finance. So it was very frustrating. So I looked on macrotrends.com, and I typed in the ticker symbol being Alibaba, and I started to look at this, and it was very different to Stake and Yahoo Finance. So I did a little bit more research, and I started to go to the Alibaba website itself. So it's alibabagroup.com, Right, you click on the investor relations up the top. You can then click earnings and financials, and it comes up with all the financial reports. If you want the full financial reports or the quarterly results, it's up to you. You can click it as a PDF or read it as an ebook. But I found this fairly interesting. So we'll look at the 2022 financial report so far, and just looking at the balance sheet here. So when I look at a company, I look at the a couple of things. I look at the current cash and cash equivalents just to see how much cash is on their books. I then look at the revenue just to see if that's nice and consistent. It continues to increase or it doesn't. I'll then look at the EBITDA, so the interest before income tax and depreciation and amortization. So what that is it's taking all their revenue and it's adjusting for whatever the company needs to pay for extra costs such as tax and interest and all that sort of stuff. So that's a very good way to see how a company is tracking, but also the liabilities. So you want to check the liabilities out as well. Overall, I'm just to say I'm not an expert in this as well. I'm just generally interested just to see how the companies are performing, and I want to try and educate myself a little bit better, which is why I'm looking into these financial reports. So I'm by no means an expert, but here, as you can see here, you've got. Let's look over at the Alibaba balance sheet here on macrotrends.com, and it's saying here for the balance sheet, the cash on hand is $77 billion. Now, that was very different to a lot of the other websites. So I looked on the actual Alibaba website, and it's got current assets, cash and cash equivalents. It's only 29 billion. So what I quickly figured out though is if you add up these first 4 lines, that accurately adds perfectly up to the cash on hand being here at $77.696 billion cash on hand. So I thought that was very interesting there. Now, what I like about the cash on hand here is that it shows you an annual progression. So let's look at from 2017, the cash on hand was 22 billion, and then every year you can see an awesome increase, and now it's sitting at just over 77 billion cash on hand. So I find that very very comforting that if a company has cash on hand, they can easily pay out their liabilities, and any other contingencies that happen within their company, such as fines, from the government, etc. They can easily pay that without no worry about having to pay it. So that's good to see that their cash on hand is actually quite a large number. You can now look at the total assets that they have on hand here being $267 billion versus their total liabilities being only $98 billion. So that's also that looks good to me. Now looking over at the income statement, looking at their revenue, again, so you can see that nice linear progression from 2017 being $22 billion, and then every single year increasing that revenue to now a comfortable $134 billion. All right, now let's look at the EBITDA. So as I explained previously before, this is a very good indication of how the company is tracking financially. So let's look back at 2017. The EBITDA was sitting at $9 billion, and every single year they've increased that EBITDA very comfortably. All right, so we just discussed the financial report of 2022 from Alibaba. We're now going to look into the interim report for the 2023 side of things. So it only incorporates the first 6 months of the financial year, but this is a good indicator to see if they're on track to actually meeting their targets for the full 2023 report coming up. But here you can see the first 6 months being, now if you look on the left hand side, this RMB, this is the Chinese yuan currency, so just ignore that, it's all in millions. What we want to look at here is the US currency, and the top line revenue just on the top. So we're looking at $58 billion as a total revenue, but then we have to start to include the cost of that revenue, but also the EBITDA and all that sort of stuff. So when you take off all the EBITDA, so all the interest and all the tax and the amortization that they're paying, we've now got an end-line profit of just over $11 billion. So that's the amount of cash that they're working with, which is quite interesting. So once you factor that in, and then you look on, let's go to the balance sheet on macrotrends.com. All right, and you're looking at the cash on hand being, well, so far in 2022 being 77 billion or just over. You then take in that $11 billion that they've got left over for cash, and then you add that in. That's looking at 89 billion dollars just for the first 6 months. So then again, if you sort of double that for the next 6 months to end the year of 2023, you're now sitting at over just $100 billion of cash, just for the 2023. So that $77 billion that you can see there for 2022 can quickly turn into $100 billion of cash for the next report coming in. So if it happens, it happens. Let's see how the progress tracks with the next 6 months, but I'll be interested to see what that actually looks like. But scrolling down even further, this is a report that I found quite interesting, because it doesn't just show you how much revenue or earnings that they're actually making, but it actually breaks down into different segments. So this top bar here is the China commerce, taking into consideration the direct sales, the customer management, the wholesale. So looking at the China commerce as a whole, all right, they've made just under $39 billion just from their commerce alone, which is 67% of their total earnings. So, which is quite high. So you can see that they rely on their commerce a lot more. Moving slightly down here, you can see the total international commerce that they've made, which is just over $4 billion, which equates to 8% of their total earnings. And then scrolling down, we've got the different segments within their company. So you've got the consumer services, the logistics, the cloud, and the digital and media. So each being a little bit, slightly less, being 6%, 6%, and 9%. All right, but all of that totals that original $58 billion of revenue, being their total $100 worth of profit for the first 6 months. So they're just the quick pieces of reporting there, but I just wanted to share that with you guys and actually dive deep into the fundamentals of Alibaba, and just to see how they're progressing, because what you'll see is that if you were to look on Yahoo Finance, MarketWatch, or even Stake, it actually doesn't it's not accurate. But what I found with macrotrends.com, it's actually extremely accurate to what the balance sheet on the actual website says. So I'll leave it at that. Like I said before, I'm not too sure if I'm going to increase my position within Alibaba, simply because it is a fairly large part of the portfolio already. And again, I'm just not comfortable with putting all my eggs in one basket, being such a little bit of a risk, being with the China and US tensions and potential delisting off the stock exchange. But yeah, let me know your thoughts. Let me know, if you invest in Alibaba, what you think of it, what the risks versus reward are. Let me know down in the comments how you analyze the company with the financials. If there's anything that you'd recommend, let us know. I'll be interested to dive a little bit deeper into Alibaba. But yeah, if you enjoyed the video, make sure you subscribe and hit the thumbs up button. Really helps out the channel. And if you wanted to sign up with Stake and get a free stock, use the code ChrisM965. I'll leave that in the description below. But until next time, I'll catch you later.